making over $20,000 with True Forex Funds in just the last few months. In this video, I'm going to go ahead and I'm going to be breaking down my go-to strategy when it comes to prop firm challenges and when it comes to going through payouts, as well as just something I use on my personal accounts week in, week out. Now, if you guys aren't following, make sure to do so on Instagram and Twitter. I just recently posted a certificate that I got from True Forex Funds. So if you guys want to check for proof and verification, make sure to check those two platforms out. I do have it on my pinned tweet on Twitter. And also make sure if you guys aren't to join my public Telegram where I pretty much outline my trade ideas throughout the week, 100% for free. Now, without further ado, let's go ahead and let's get straight into the video. Alright guys, so this was a very highly requested video on a strategy that I personally use for consistent 2 to 3R on my trades. And again, this is going to be a very mechanical approach because I think it'll help a lot of people to kind of approach it this way, because one thing that I see most often, right, especially with some of the students that I've worked with, is a lot of them will actually be in profit, but they don't necessarily have a good risk management plan, or they might not have something where it's very consistent in terms of an approach to take profit. So I'm going to give you guys one of the strategies that I use and how I use it very systematically, where I know, hey, I'm going to take profit at this level, and again, it's 100% mechanical. There's no thinking about it. But let's go ahead and let's get into it. But before we do, if you guys aren't subscribed, make sure to do so, and also give a like to the video. Again, anything to support the channel is very much appreciated. All right. So if you guys are familiar with Fibonacci, this is a tool that I pretty much use. And for those that aren't necessarily too familiar, let's get into it real quick. So pretty much whenever you have an impulse move, you're going to have some sort of market move up, or it could be down. But for this example, it's going to be bullish. So we'll typically have a swing low forming, and then the market will form a swing high. Now, typically a good pullback point would be the 62 retracement, the 70, and the 79 if it goes really deep. And then this is going to be an area where it's considered quote unquote discount, also considered like a buy point. Now for me, I love to use this tool because again, I'd like to trade market structure. Once I have a very good area of where, hey, once I have a very good impulse leg that I know is highly probable, I want to look for buys around this area in here. I also use this as an entry tool on the M15 or on the 5-minute, depending on my criteria, right? So again, before we even get into it, these are the Fibonacci settings, because a lot of people always ask me, hey, what are the settings that you use for the fibs? So this right here is the settings on TradingView. Now, what are these levels right here? These are extension targets. Now, I use extension targets for profit taking simply because it's very mechanical and very easy to do so. So extension target 1 is the minus 0.27. Extension target 2 is minus 0.619. Now, you guys will see how we're able mechanical approach to get that consistent 2 to 3R, and I'm going to go over it real quick and then we'll get into the strategy. So how can we use the Fibonacci for a static trade? So let's assume we have a bullish swing, as we do in this example, swing low to swing high. Now if you are someone who wants to get in at the 62 and you consistently put your stop loss right beneath the low, once you get the entry at the 62, if you are always targeting extension target 1, you will yield a 2 plus 2.2 RR on average. Now again, if you have great bias, or let's just say the entry is, let's just say the market is bullish and you're looking for an entry on the M15, you can use the 62 to kind of gauge that minus 0.27. And again, you'll have a static plus 2.2 R. Now, what happens when we go ahead and target extension target 2? This will actually yield a plus 3.1 risk to reward consistently. Now, obviously, we have to take into factor slippage and potential spread as well. But again, and as well as commissions, right? But again, on average, you'll have around 3R if you target the extension 2. Now, again, this is just a static way for someone to kind of use the Fibonacci in a way for the risk management protocol. I'm going to get into the strategy of it all and how to use a high probability fib in the next few slides. But again, I want people to really focus in on this. So many people, they don't know when to TP. They don't know, okay, how can I be very consistent in my approach of when I want to take targets, when I want to take profits. And I think this is a really good way to go about it because again, it's very static. There's no thinking involved. Once price hits the extensions, I'm taking profit. Now again, subsequently, let's just say you're someone who wants a higher risk to reward. If you wait for around the 70 entry, typically, and you put the stop loss beneath the swing low, the extension target 1 will yield about a 3.0 RR. Now again, if we go to the extension target 2, we're going to have a plus 4.2R on average when you get in at the 70. And again, this is a very good static approach that you can use in order to yield high risk reward. Now, if you're someone who wants a 79 entry and get an even better risk to reward, then you can go ahead and do so. Just be mindful. When you do take the deeper entries, you're going to miss a lot more trades. But again, the risk to reward is a lot higher overall. So if you're someone who's okay missing more trades, but your focus is primarily to be locked in on a very deep retracement so you can get the best risk to reward, then hey, by all means, that will work. For me personally, I'll use the 70 most often than not. I'll use the 62 every now and then if, let's just say, there's a key level here that's right at the 62. So just to make sure I don't avoid the trade, I'll get at the 62 in that sense. But most times I'll try to wait for the 70 just because I like the risk to reward a lot better when it hits the 70. Alright guys, so now let's go ahead and let's get into the actual strategy that I use with this mechanical approach. So again, this is my favorite Fib strategy breakdown. So essentially, I want to find an impulse swing on the M15 that is created inside of an H1/H4 reference points. And then again, time frame is up to you. So you guys can experiment with it. You can just use an H1 entry. You can use an H4 entry if you're someone who doesn't necessarily like to go down on the lower time frames because maybe you're a swing trader, maybe you're busy, you have like some sort of job or whatever it may be, and you just want to take the entry. You can use this on any time frame. Now again, I use the M15 just because I like to have a little bit more wiggle room in terms of range, but again, you can use this either way you want. Now ideally, that impulse takes out a prior liquidity pool while also creating an imbalance on the impulse leg. So I'm going to have a lot more visual examples, but I'm just going to go over the checkpoints real quick. Ideally, again, there's an opposing liquidity or reference points on the other side. So again, if I'm looking for a potential buy, I want to see above that high, is there like an imbalance? Is there an untapped zone that we can reach up into that hasn't been tapped in before? Typically, I like to see that as an extra confluence. Also, price creates these criteria during a kill zone. So again, it's going to be around 2 to 4 a.m. Eastern time and then 7 to 10 a.m. Eastern time. I typically like to use a kill zone. Now, if I'm trading something like crypto, I'm not going to necessarily care too much about the kill zone, but for Forex sake, I do prefer these time zones just because there's more highly probable that this occurs. So here's a visual example. So let's just say that the market has a run lower beneath a prior day low, a prior session low, or a prior week low. Now, let's just say the market takes out liquidity, and then we have a very strong impulse move up and price creates an imbalance. Price creates a balanced price range and creates a higher probability market structure break. Again, I just uploaded a video a few days ago on high probability market structure breaks, so you guys can go ahead and reference that video for that topic. But again, we have a strong market structure break. Now, ideally, this swing low to swing high, the market is ultimately creating a potential dip down into a discount level. So let's just say this is around the 62. And the ideal scenario in this situation, let's just say you get in at the 62 or the 70, the market, we know that if the market is going to create a higher low, we have to take out the high that was just created. And ideally in this scenario, you'll have a clean high scenario where we know, hey, the market is going to most likely have an easy run above this high, and then we have an additional reference point. Again, this could be, let's just say, an imbalance. This could be an order block that was not retested. It can be anything that ideally a clean level that hasn't been tested before. And it just gives more framework to the trade, and it gives more of a confluence like, hey, price may want to reach up into this level. And again, this retracement ideally happens during a kill zone. So I'm going to go ahead and give you guys my risk management strategy on how I ultimately use this. So once price hits a higher high or a lower low is when I will adjust stops to break even. So again, if I'm looking for a buy and the market has the retracement lower, I'm looking for, once the market reaches that high, I'm typically going to break even, or I'm going to be trailing it depending on the leg. Now, once price hits the extension 1 is when I will take most, if not all, the position off. Again, guys, my goal is to be very consistent with my trading. I don't like too much ambiguity. I like to kind of have a very methodical approach. So I'll typically take most off at the extension target 1 for the most part. Now, if there's a clear reference point like in the prior example, I will hold maybe 50% of the trade to that upside objective, but I'll personally look to lock something in to avoid dealing with a deep retracement because, again, sometimes if you have price making a new high, it might have a very deep retracement before continuing up. So that's why I typically have these risk management strategies in place just to avoid that type of scenario. So guys, before we go ahead and we get into the charts, I actually have a full PDF on when to avoid OTE. It's a few pages long. So if you guys want the full PDF on like my criteria is to avoid OTEs, send me a DM on Instagram saying PDF and I'll respond to you with it and I'll send it to you guys there. The IG link is going to be in the description below, so make sure to check that out. And I will be responding to everyone's DM. So make sure if you're interested in that, just hit me up on Instagram and I'll go ahead and send it to you all. So now let's go ahead and let's get into the charts. All right, guys. So now here's a chart of ETH where I'm going to go ahead and break down the full system in place that we just talked about. Now, again, look at ETH where we had the market essentially take out prior liquidity pool and we actually into a reference point. So again, if we take out liquidity pool into a reference point, so in this case, we pretty much closed up around this imbalance point and then we had an impulse move up, that is essentially going to be that's going to be even better confluence. So again, we took out liquidity and then the market had an impulse leg right here. So let me go ahead and mark out my swing low. So from here, this is the full leg, right? So I talk about it in my course. Now I do talk about this more like so in my academy, but this is the full swing right here from this low to that high. Now you can consider this low to that high as kind of like your swing point because again, this is like, I call it a minor impulsive leg where this was ultimately the leg that did break structure, right? Because again, the market made a low here before making a new high. But again, I'll have a whole course on that if you guys want me to about market structure. So you guys can kind of hit me up on here and let me know if that's something you're interested in. But again, for argument's sake, let's just use the full leg because this is the prior low before the full high. The market creates a swing high and then we also have a retracement point down here. Now again, let's go ahead and use the extension targets as potential TPs. The market has an impulse leg. This impulse was created after clearing liquidity into a reference point. We also have these relative equal highs in here that the market creates on the drop lower. And again, this is something that I talked about if you guys are in my public Telegram before the fact. So again, I like to use examples of trades that I personally have taken or trades that I personally pointed out in my public Telegram. So make sure to check that out. Link in the description below. Now again, very simple system. Now again, this could be an M15 chart, this could be an M5, but nonetheless, let's go ahead and let's just assume that we put the entry at the 62 and we put the stop loss right beneath the low. Again, whether or not you have a target, you can use again the minus 0.27, which is the extension target 1, which will yield around a 2.2 risk to reward. And again, if you use the extension target 2, this is around a 3.1. Now again, if you're someone who likes a little bit of a deeper retracement, you can get in at the 70. And again, extension 2 will be 4.29. And the extension target 1 will be at 3.14 risk to reward. So now you guys can see how, like, if you're able to be consistent with a proper win rate and you're able to keep your risk unit pretty much the same, this can be a very viable, easy trade because it's very easy to see, right? We have a liquidity pool raid, we had the market make an impulse push up that broke a prior structure. And again, it's very, very simple. Now, obviously, if you can incorporate this with a higher time frame bias, like as in this example, let me go ahead and actually go to the daily time frame because I believe on the daily, this one, well, actually, I think it was on the weekly time frame. Okay, yeah, because when we go on the daily time frame, right? And again, this was a trade that I called live in my public Telegram. We had this daily imbalance. So we were seeing this retracement with the confirmation of this daily imbalance point as well as having like pretty much bullish flow, bullish structure. And again, when we go on the weekly time frame on this, the market was kind of moving bullishly and we had this imbalance to fill as a bigger picture reference point. So again, when you have all these frameworks, you can just use the you could just use any time frame really as a confirmation entry. And in this example, this was a very well-timed trade because the flow was bullish on the daily. And again, weekly had an upside objective. H4 gave the confirmation of liquidity pool raid and then the impulse move up. And again, you can use the fib just to have everything very methodical in the sense of, hey, you know what? I want to take profit. I want to take profit here at the extensions just to keep it very consistent. Now again, if you have a big picture target, can you kind of just like bend the rules a little bit and then maybe hold a little bit longer? Yes, when the opportunities are there. But again, for consistency, if you're someone who just likes to have a very methodical approach where you're going to have consistent results, this is a very great way to do so. So I'm going to go ahead and show you guys one more example on EU, and then we'll kind of close it up on that note. All right, guys. So again, I wanted to use this example here on EU because this was also another example of what I've been talking about in the public Telegram. So again, what did we have here? We had the market having a liquidity pool raid where the market, we tapped up clear liquidity, but then we had a significant more run. Boom, price broke down, and we kind of had this quote unquote higher probability market structure break. Again, watch that video. It's the video that I posted right before this one, and it's labeled the #1 high probability market structure break. Because again, we have the market created a bullish imbalance, was overtaken, and then we have a bearish imbalance as well. So again, we have swing high to swing low, price comes back into the 62. And again, do the extension targets line up with something? Yes, they do. Extension 1 lines up with this imbalance. I'm sorry, extension 1 lines up with this imbalance. Extension 2 lines up with this bigger picture imbalance as well. So again, if you have, like, this is when you can determine if you want to hold for extension 2. If there's a big picture like level that you want to play into. And if we go ahead and play this, we're going to see ultimately that the market does hit the extension 2 to the T, and then the market ultimately reverses. Again, guys, this is just a very simple approach. And again, if you take this, let's just say you just take this short right here. And again, this is a 4-hour time frame. So if you're someone who's able to kind of hold for a little while, again, 2.2 risk reward, let's just give it a little bit of room. So again, around a 2.2, or if you hold for the extension targets, a 3R. And again, if you can scale this type of system, right? And even if you have only a 50% win rate, but you can average 2-to-1 or 3-to-1 consistently, you can pass any challenge, especially if there's no time limits on the challenge, or you can easily just grow an account simply by having this very mechanical and systematic approach. Now, again, guys, this was I just feel like with most people, when it comes to trade management, this is like a big detriment. So I want to give you guys a tool that I personally use with a strategy that I consistently use. So if you guys like the video, please let me know your thoughts in the comment section below. Also, if you guys want that PDF, don't forget to go ahead and DM me on Instagram, PDF, and I'll send it over to you guys as soon as possible. And yeah, guys, check out my other videos on the channel. I have a lot more educational videos coming out, and I already have a lot of educational videos on my channel. Let me know what you guys want me to create in the comment section below. And until next time, I'll see you guys later.